Now let us understand operating leverage in detail. To understand the operating leverage, I am preparing a profit statement. Sales minus variable cost, you get contribution. And when you deduct fixed cost from contribution, you get your EBIT, earning before interest and tax. This fixed cost is your operating fixed cost. Remember, this is not financing fixed cost. This is operating fixed cost because we are talking about operating leverage now. So I'm taking some random figures. For example, sales is 1 lakh rupees. Variable cost is 40,000. Your contribution comes 60,000. And let's say operating fixed cost is 40,000. And your EBIT comes 20,000. Now, if I have to calculate the operating leverage, I have one formula. And the formula is contribution divided by EBIT, earning before interest and tax. So our contribution in our example is 60,000 and EBIT in our example is 20,000. So here the answer comes 3. My operating leverage is 3. Now what is the interpretation of this 3? If some business has 3 operating leverage, what does this mean? This means that if the sales changes by 1%, if the sales changes by 1%, my EBIT will change by 3%. If sales is increased or decreased by 10%, my EBIT will increase or decrease by 30%. Just multiply by 3. If my sales changes by 20%, my EBIT will change by 60%, just multiplied by 3, just multiplied by the operating leverage. We can cross check. Increase your sales by 10%. Increase your sales by 10%. Say it will be 1,10,000 after increase of 10%. Because variable cost is variable, it varies with the sales and production. This will also increase, and it by 10% increase, it is coming 44,000. Now your contribution comes 66,000. 66,000. And because fixed cost remains fixed irrespective of the sales or production level, my fixed cost is 40. Operating fixed cost is 40. Here your EBIT comes 26,000. And if you will see the percentage change between the EBIT, between the two EBIT, you will get this percentage as 30% change. 20,000 से 26,000 हो गया है EBIT, 30% का चेंज आया है, पर सेल्स तो 10% से ही चेंज हुआ था सर, ये 30% से EBIT में चेंज क्यों आ गया है? ड्यू टू leverage, because leverage is an strategy that uses fixed cost. अच्छा, अगर ये फिक्स कॉस्ट नहीं होता, अगर ये फिक्स कॉस्ट नहीं होता तो जितना सेल्स में चेंज हुआ है उतना ही EBIT में भी चेंज आता. ये मैग्नीफाइंग इफेक्ट क्यों आया है? ड्यू टू प्रेजेंस ऑफ फिक्स कॉस्ट. ये फिक्स कॉस्ट के कारण ये मैग्नीफाइंग इफेक्ट आया है. आप करके देख लो, ये फिक्स कॉस्ट हटा लो तो जितना आप सेल्स में चेंज करोगे 10% का, उतना से ही EBIT भी चेंज होगा 10% से. ये EBIT जो आपका प्रॉफिट, ऑपरेटिंग प्रॉफिट 30% से क्यों चेंज हो रहा है? क्योंकि आपने फिक्स्ड कॉस्ट को यूज किया है. दैट इज द रीजन वाई वी से कि ऑपरेटिंग लेवरेज arises due to presence of operating fixed cost. अभी हमने 10% से इंक्रीज किया है सेल्स को, तो हमारा EBIT 30% से इंक्रीज हुआ है. अगर मैं 10% से डिक्रीज करूं सेल्स को, 10% से डिक्रीज करूं सेल्स को, तो भी क्या मेरा EBIT 30% से डिक्रीज होगा? द आंसर इज यस. दैट इज द रीजन वाई द लिवरेज इज अ स्विंग. इट मैग्निफाइज द प्रॉफिट also, but at the same time there is a risk of magnification of loss also. अगर सेल्स 10% से गिरा तो आपका ऑपरेटिंग प्रॉफिट या EBIT कितने से गिर जाएगा? 30% से गिर जाएगा. यानी कि पॉजिटिव साइड्स पे भी उतना ही स्विंग करता है जितना नेगेटिव साइड्स पे करता है, या इसको उल्टा बोल दे तो भी सही है कि नेगेटिव साइड्स पर भी उतना ही स्विंग करता है जितना पॉजिटिव साइड पर करता है. अभी समझ में आ रहा है मैंने स्विंग का एग्जांपल क्यों दिया था? So we can say the operating leverage is the relationship between sales and EBIT. Now let us understand the financial leverage in detail. To understand the financial leverage, I will extend this profit statement which I have prepared for operating leverage, and I will start with EBIT, which was I think 20,000. Yes, 20,000 was my EBIT. I'm just taking random figures. If I deduct interest expenses from EBIT, I get my EBT, earning before tax. For example, interest is 10,000, my EBT comes to 10,000. I will deduct tax expenses from EBT. For example, tax is at the rate of 30%. So 10,000 ka 30% is 30,000. 3,000 is my tax. So earning after tax, EAT comes 7,000. This is the extended profit statement for financial leverage. Now, if I have to calculate the financial leverage, I have the formula, and the formula is EBIT divided by EBT. What is EBIT in our example? 20,000, and EBT is 10,000. Here the financial leverage comes to 2. Now what is the interpretation of this 2? If the EBIT changes by 1%, my EAT will change by how much? 1% multiplied by 2, that is 2%. If my EBIT changes by 10%, my EAT will change by 10% multiplied by financial leverage, that is 2. My EAT will change by 20%. If my EBIT changes by 20%, my EAT will change by 20 multiplied by financial leverage, that is 40%. So now understanding the interpretation of this 2, you can also cross check. Just increase your EBIT by 10%. It will be 22,000. Interest, because the interest is the fixed financing cost. This is our fixed financing cost, and due to presence of fixed financing cost, the financial leverage arises. Okay, this is the financing cost. So financing cost, because it is fixed, so it will remain 10,000. Now in this case your EBT is 12,000. Your tax 30% on 12,000, your tax will be 3,600, and this comes to 8,400. Now, if you will see the percentage change in EAT, it will be 20% increase because it was the 10% increase. And you already knew this because you already knew the financial leverage. Understood? So, take any percentage, cross check by your own, you will get the same figure, the change multiplied by financial leverage. Same way, if I decrease it by 10%, will it also decrease by 20%? The answer is yes, because we already know now the leverage is a two-way swing. It can magnify the profit also with the same amount, it can magnify the loss also. There is one more formula for financial leverage. I have written this formula. Sir, ये वाला formula कब लगाना है? When there is a preference dividend available. When there are preference share capital and the company has to pay the preference dividend, उस केस में ये वाला फॉर्मूला अप्लाई करना है. फॉर अंडरस्टैंडिंग दिस, आई हैव फर्दर एक्सटेंडेड द प्रॉफिट स्टेटमेंट. आफ्टर EAT, you have to deduct the preference dividend. Let's say preference dividend is 2,000. You get earnings for equity shareholders, that is 5,000. Now you have to divide the earnings for equity shareholders by the number of equity shares, and say for example number of equity shares is 1,000 in numbers. You will get your EPS 5, earning per share. This is our final destination of the profit statement. Now I have to apply the second formula for financial leverage, because in this case I have preference dividend available with me. Let's apply this formula. Let's put the value. EBIT, that is 20,000. EBT, that is 10,000. यहां तक तो पहले फॉर्मूले जैसा ही है. जो चेंज है वो यहां से है. प्रेफरेंस डिविडेंड इज 2,000 होल डिवाइडेड बाय 1 minus tax rate, and tax rate is 30%. Can I write 0.30? 30% को मैं 0.30 लिख सकता हूं. And if you will solve it on a calculator, you will get 2.8. Now what does this 2.8 interpret? इस 2.8 का मतलब क्या है? If EBIT changes by 1%, the EPS will change by 1% multiplied by this financial leverage 2.8. That means my EPS will change by 2.8%. If my EBIT changes by 10%, my EPS will change by 28%. Now you know the drill already. In this case, there is a relationship between EBIT and EPS. In the previous formula, there was the relationship between EBIT and EAT. What's the difference between these two? The previous formula of financial leverage, there was no preference dividend, but in this formula we have taken the preference dividend into consideration. So now the relationship is between EBIT and EPS. So if I summarize the financial leverage, so there are two types of financial leverage formula, and there are two types of interpretation also. If there is no preference dividend, then financial leverage is the relationship between EBIT and EAT. If EBIT changes by 1%, the EAT will changes by 1% multiplied by the financial leverage. And if there is preference dividend available with us, the financial leverage is the relationship between EBIT and EPS. If EBIT changes by 1%, the EPS will change by 1% multiplied by financial leverage. So you have to understand this two types of interpretations and two types of formula. If there is preference dividend and if there is no preference dividend. Is that okay? Last but not the least, we will talk about the combined leverage. Combined leverage is nothing but it is the operating leverage multiplied by the financial leverage. And if you calculate it, what will be the interpretation? The interpretation will be if there is a change in sales by 1%, the EAT will change. EAT will change by 1% multiplied by the combined leverage, whatever the combined leverage is coming, right? If the sales changes by 10%, the EAT will change by 10% multiplied by whatever the combined leverage is. For example, combined leverage is 4, then the EAT will change by 40%. If the sales changes by 20%, the EAT will change by 20% multiplied by combined leverage. Is that okay? This is the one interpretation of combined leverage. Because we have two formulas for the financial leverage, there will be two interpretation for combined leverage also. The another interpretation when we are using the formula of financial leverage when preference dividend is available. In that case, the interpretation of combined leverage will be if sales changes by 1%, now EPS will change by 1% multiplied by combined leverage, not EAT. This was the interpretation when there is no preference dividend available. And this is the interpretation when there is a preference dividend available. Is that okay? Understanding? If sales changes by 10%, my EPS will change by 10% multiplied by the combined leverage. If sales changes by 20%, my EPS will change by 20% multiplied by combined leverage. As there is a two interpretation of financial leverage also, same way there is a two interpretation of combined leverage also. And because it is combined, so the entire profit statement will combine starting from sales to the EPS. Is that okay? Till now we have understood the calculation part of the leverage. At last, I just want to tell you the practical implication of this concept. अगर कोई क्लाइंट आपके पास आता है और आपसे पूछता है कि उसे फंड्स कहाँ से एक्वायर करने चाहिए, क्या उसे इक्विटी शेयर होल्डर से एक्वायर करने चाहिए एज ए कैपिटल या उसे बैंक से लोन ले लेना चाहिए एज ए बोरोड फंड. सो व्हाट यू हैव टू सजेस्ट इज कि अगर वो एक्सपेक्ट कर रहा है कि उसका सेल्स नियर फ्यूचर में इंक्रीज होने वाला है तो उसे बोरोड फंड से एक्वायर कर लेना चाहिए. क्यों? इसके पीछे का लॉजिक ये है कि अगर वो बोरोड फंड्स एक्वायर करता है तो उसे एक फिक्स्ड अमाउंट ऑफ इंटरेस्ट पे करना पड़ेगा. एंड नाउ वी वेरी वेल नो कि अगर हमारी फिक्स्ड फाइनेंसिंग कॉस्ट बढ़ती है तो हमारा लेवरेज भी बढ़ेगा और अगर हमारा लेवरेज भी बढ़ेगा तो हमारे प्रॉफिट पर मैग्नीफाइंग इफेक्ट आएगा. तो अगर तो वो सेल्स एक्सपेक्ट कर रहा है कि नियर फ्यूचर में इंक्रीज होने वाला है तो उसे बोरोड फंड से एक्वायर करना चाहिए. एंड इफ ही इज एक्सपेक्टिंग द सेल्स टू डिक्लाइन इन नियर फ्यूचर, अगर सेल्स कम होने वाला है नियर फ्यूचर में, तो उसको सजेस्ट नहीं करना है बोरोड कैपिटल, तब उसको इक्विटी शेयर होल्डर से एज ए कैपिटल एक्वायर करना चाहिए, क्योंकि इक्विटी शेयर होल्डर्स को हम कोई फिक्स्ड रिटर्न नहीं देते हैं। अगर प्रॉफिट होता है तो डिविडेंड देते हैं, अदरवाइज देयर इज नो एनी फिक्स्ड अमाउंट ऑफ डिविडेंड, देयर इज नो फिक्स्ड फाइनेंसिंग कॉस्ट दैट वी पे। तो अगर फिक्स फाइनेंसिंग कॉस्ट नहीं रहेगी तो लिवरेज कम अराइज होगा, और लिवरेज अराइज नहीं होगा तो अगर सेल्स गिरा भी तो हमारे लॉस पर मैग्नीफाइंग इफेक्ट नहीं आएगा। दिस इज व्हाट द प्रैक्टिकल इंप्लीकेशन ऑफ लिवरेज इज।